Hey everyone, it's Zach Beck. 2020 was an intense year. We faced a pandemic, a recession, as well as a presidential election, and millions of people were impacted on varying degrees because of these various issues. When it comes to the pandemic, maybe your health was impacted. Perhaps a friend or a family member might have passed away because of the pandemic, and if that's the case, I am very sorry if that happened. Furthermore, people lost their jobs, people had been furloughed, and also people lost income as a result of the financial consequences associated with the recession. And if that happened to you or directly impacted you, I am very sorry. Furthermore, with the presidential election, it was very divisive, pitting friends and family members against one another and our country against one another. So if that is the case and you were impacted in a negative manner associated with that, I am very sorry. But we do have some positive indicators moving forward in all three of these categories. So what I want to do in this video is cover those topics in detail so we can begin to position ourselves moving into the next year in a very positive manner, allowing us to move forward and achieve our goals. So let's take our time, dive into the details, and jump into it right now. When it comes to the pandemic, there has been some positive developments related to vaccines. Specifically, we saw Pfizer, AstraZeneca, and Moderna all have high efficacy rates when it comes to their vaccines specifically, and different governments are now starting to purchase those vaccines so they can begin distributing them to those who are frontline workers in the healthcare industry. So with that being the case, we're seeing that maybe, just maybe, we might be seeing vaccines being distributed to the broader population next year. And if that is the case, that would yield very positive results to our economy and to our lives as a whole. So let's hope that that does continue moving forward. Once again, I am not a scientific expert by any stretch of the imagination. I'm just reporting what I've been able to read in the news developments as of recently, but I just want to pass that along to you to let you know that there is some positive developments when it relates to vaccine developments moving forward. On the financial front, there is some very positive news. James Bullard, who is the president of the St. Louis Federal Reserve, actually says that he believes there's light at the end of the tunnel when it comes to this particular issue surrounding the pandemic and the recession. He referenced specifically the vaccines that have been developed through those three different companies and the possibility of those being distributed to the broader population next year. Furthermore, when it comes to the stock market, the Dow Jones Industrial Average just hit 30,000, meaning that we have hit a benchmark that we've never hit before. Furthermore, there is actually indications from this that people are saying we might be able to see 40,000 at the Dow Jones Industrial Average next year. So all that to say, that is very positive news, not to mention Tesla has joined the S&P 500. And furthermore, what we're seeing is that people who have been sitting on the sidelines are now beginning to feel a bit more optimistic when it comes to putting money into the market. So overall, financially, we might be seeing a market that is actually going to be on a tear next year. It's very difficult to predict the future, but it looks like the indications right now are very positive. Now, it is very difficult to forecast the future, but there are positive indicators right now financially which could impact you directly. Specifically, if you lost your job, were furloughed, or lost income as a result of the recession, we might see companies begin to hire more expeditiously moving into 2021. So if you're able to position yourself effectively right now, hopefully you can either go back into the job you had previously, or you'll be able to circumvent yourself into a different area of the economy that might even pay more effectively. And we're seeing some of the changes that transpired in the economy might be here to stay, such as working from home and doing remote things. That actually might make you more efficient and require you to not have to commute to your employer. So you might even have a broader, different groups that you could actually apply towards, because you might be able to work for companies in different states or even different countries. Now, when it comes to this, what I would also say, the economic indicators do impact investments directly. Now, I referenced previously that the Dow Jones Industrial Average hit 30,000, Tesla joined the S&P 500, and we're seeing all this positive news circulating around, specifically when it comes to Wall Street and investments. Now, if you do not currently invest into the stock market, you might be missing out on the opportunity to realize significant gains moving forward. Now, I totally understand going through a recession, having lost either your job, been furloughed, or having your income reduced, investing might not have been on the top of your mind. But what I would encourage you to do is, if you really want to move forward financially and achieve your long-term goals, you want to get your money to work for yourself. So whether you're investing directly into the stock market just through an account that goes into an investment brokerage, or if you're actually doing something more strategic, like say investing into a Roth IRA or a 401k retirement account that is helping you secure your future, whatever approach you take, the important thing is that you begin investing at a time when you're financially able to do so. Now, if you're here with student loan debts and you have a giant amount of consumer debt, or you don't have any ability for you to make forward progress financially, you want to hold off on investing until you can actually reach a threshold where you're comfortable in doing so. But you also want to make sure that you're not just trying to time the market, because time in the market is more important than trying to time the market. So if you have the ability to invest right now, I wouldn't be sitting on the sidelines any longer, because if we're at 30,000 today, who knows, we might be at 40,000 next year, 50,000 the year after that. Obviously that would require very significant blockbuster levels of growth, but it's possible. Obviously when you invest, you know there's a calculated risk that comes with that. So you might see a downturn where sometimes the investments do lose a little bit of value, but you only lose value in the stock market if you pull your money out of the market when it's low. There's a saying that goes, the people who get hurt on a roller coaster are those who get off in the middle of the ride. So make sure that if you're going to invest, you're in it for the long haul and you're investing strategically into things that you understand. What I like to invest into are what are called index funds, which allow you to invest into multiple companies that generally have a proven track record where they yield about 5 to 8% on an annual basis. Now, what you're going to find is that you're going to invest, you can have various companies that you do this through. You can either go and buy a direct index fund through a company like Vanguard, or you can use other tools. I specifically like to use Wealthfront, where I invest into Wealthfront into these different mix of index funds, or what they call ETFs, exchange traded funds. Furthermore, if you actually want to go get individual stocks, feel free to try out some different applications like Robinhood and WeBull. I have links in the description right now where you could go click on that, sign up and get free stocks. You get 1 free stock from Robinhood and 2 free stocks from WeBull. Those could be valued all the way up to $1,400. It's free to go ahead and check that out, so I'd recommend doing so if you'd like. From a political perspective, we've had some resolution as well. The 2020 election ended with Vice President Joe Biden becoming the new president-elect of the United States. And because of that, the markets have calmed down a little bit because there's less uncertainty. We are going to have a divided government as it stands right now, with a Democrat as the president, a Democrat-controlled House of Representatives, and a Republican-controlled Senate. Now, there's going to be a special election in Georgia in January, which could flip the balance of power in the Senate to Democratic control. But either way, what we're seeing right now is a relatively divided government with small majorities in both the House and in the Senate. And because of that, any sort of legislation moving forward is most likely going to be more moderate because it's going to need to appeal to both sides of the aisle. Therefore, the market has responded in kind, and now we're seeing all of this positive economic indicators moving forward. Furthermore, what we are seeing, there have been some very tangible steps already taken by President-elect Biden to hopefully satisfy the markets and also encourage economic growth moving forward. He selected Janet Yellen to serve as his Secretary of the Treasury. She will take over for current Treasury Secretary Steven Mnuchin, but this individual, Janet Yellen, previously served as the chairman of the Federal Reserve. So you might have heard me talk a lot about Jerome Powell, who is currently the Federal Reserve chairman. Previously, it was actually Janet Yellen. So Janet Yellen and the chairman of the Federal Reserve, currently Jerome Powell, have a very close working relationship and will be able to communicate effectively moving forward. The markets took this news very optimistically, and they believe that as we're moving forward, we will probably see additional stimulus, and at least we will see better working relationships between the Treasury Department and the Federal Reserve. So some of these indications we're seeing already are going to yield positive results for us, not just when it comes to our financial aspect, but even politically. We are seeing things tamp down a little bit because there is no longer this pressing election cycle on us. And irrespective of what your opinion is, if you were in favor of the Republican candidate Donald Trump, or you were in favor of the Democratic candidate Joe Biden, I just want to let you know I'm not here to push on a certain agenda or provide a political preference for myself to yourself. I respect your views and believe that you have the freedom to make the right decisions that work best for your personal situation, as well as you believe is best for the country as a whole. I'm just saying that right now things have calmed down a little bit and it looks like we have some clarity moving forward. And that in turn is going to yield positive results for us in the economy, which hopefully will be a better bottom line for yourself. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please like the video. That would really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, answer any questions on your behalf, and do any research on your behalf so you can make well-informed decisions moving forward. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create content that makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful remainder of your day. Talk to you next time.